Chapter 13. Before we start, smash subscribe and like and share to see more content like this. The final analysis. I really enjoyed writing this book and hope you have enjoyed reading it. I have read a lot of technical books on trading, and most of them have been extremely boring and hard to understand, so I've tried hard to make this one more entertaining. We have an office in Derry, Ireland, and a dear friend of mine, Kevin McGowan, owns it. He has been a real blessing in my life and has taught me a lot, starting soon after we first met. As I was getting ready to teach him what I knew about the Forex, he pulled me aside and said, "Chief, as you move forward teaching me about the Forex, explain it to me as if I were a 2-year-old and then I will understand." Since then, I have thought of that statement every time I have attempted to explain something to someone. I want to end this book with a dramatic battle between the bulls and the bears. It is a battle where the bulls seek to destroy the bears, marching out of the wilderness by night, catching the bears off guard as they lie in hibernation, slaying every bear in their sight in an attempt to finally end the ongoing war between the bulls and the bears. To their surprise, the tables turn. The bulls underestimated the strength and endurance of the bears, and the bears once again rise in the fullness of their wrath, forcing the bulls to flee for safety back into bull country to regroup. However, this time, a clear sentiment is surfacing in each respective camp. The next battle will need to be fought with the determination and commitment of total annihilation, a final battle that frees the world of any and all future conflict, a battle that finally brings peace to the land. Each respective camp prepares for war. The bulls charge once again, hoping to catch the bears off guard, only to find them well prepared and ready for battle. So great and lasting becomes this war that there is no time to bury the dead. There is only time to fight and survive. A battle that completely and utterly destroys two nations committed to their causes and beliefs. In the end, they all fall by the sword, leaving only two surviving warriors, an exhausted bull and an exhausted bear, perhaps the nation's leaders or generals, standing eye to eye. As they gaze into each other's eyes and at their surroundings, they both finally realize they are the only two standing and that they are both covered with massive battle wounds. The realization that millions of bulls and bears, including all their loved ones and their personal possessions, have been destroyed is beyond their mortal comprehension. Barely able to stand, they contemplate what their opponent's next move might be, and their minds begin to wonder. Was their cause just? Was it even worth it? As they stand there filled with pain, the bull begins to remember the words of his father that in life, you either control your own destiny or someone else will. Resting on his sword, the bear is caught off guard as the bull charges one last time, cutting off the head of the bear. With the decapitated bear's head on the ground, the bear's body stands on its two hind legs, claws extended, and begins to charge as if it just found new energy to attack one last time. Struggling as it steps forward, the bear's body takes one last breath, then falls to the ground and dies. Standing in shock and disbelief of what just took place, the bull collapses from sheer exhaustion. Lying there lifeless and filled with sorrow, the bull concludes there is no reason to live. These words begin to resonate from the bull. Life is clearly about suffering, and happiness only comes to those who can find meaning in the suffering. With no ability to find any meaning at everything that just happened, the bull takes his last breath and dies of a broken spirit, leaving all their bodies to become prey for the other beasts of the world. In the end, if this were the course of events, I would then want to analyze what happened. Why it was that the war had to be an all-or-nothing war? Why couldn't there have been a compromise? What exactly was it that drove them to such madness, such hatred, and eventual self-destruction? But I can't, because the war continues and will continue. You see, the world is round and is a place where there is no beginning and there is no end, only a continuation, an infinite marathon where the baton is passed from one generation to another. What might seem like an ending to some becomes the beginning to others. Either way, life needs to be about progression, not regression. Trading has changed my life. I am who I am because of what I have seen, heard, and experienced. Good and bad. We are all a compilation of everything we have seen, heard, and experienced. I am grateful for everything I have been able to experience, including all the negative. I don't think I would have amounted to much if it weren't for the adversity in my life. I have learned that adversity is the blow or strike that sharpens the sword. As you learn to trade on the Forex, or any market for that matter, put it all into perspective. Make sure trading is a part of your life and not your entire life. Make sure you are able to digest your food and sleep at night when you are in a long-term trading position. Sure, there is no success without sacrifice, but never forget the market moves on its own time frame, not yours. As it moves on its time frame, be disciplined and control your desire for instant gratification, because it is only the delayed gratification that will bring you long-term success. I hope you realize that there really is no true secret to success. It is for you, it is for me, it is for everyone. If there was a secret to success, it would be to straighten out what is between our ears. Ignorance has its price. In reality, success is achieved in inches, not in miles. My grandson, Jeffrey, came home from school one day and said, "I know why you are so rich, Grandpa." I said, "Why?" Remember, wealth is relative. At his age, $1,000 is all the money in the world. He said, "I learned today from a guest speaker in school that most poor people read one book every 5 to 10 years. Average income earners read one book every 3 to 5 years, but rich people read at least one book a month." He looked at my bookshelf, filled with hundreds of books, and asked, "Which book do you want me to read, Grandpa?" I smiled at him and handed him a book titled Children, the Challenge. Obviously, his guest speaker read the same article I did. The article goes on to describe how a university conducted a study on the daily habits of low dash, average dash, and high income earners. To their surprise, they discovered that low income earners read on average one book every 10 years. Average income earners read a book, on average, once every 5 years. But, not surprisingly, they found that high-income earners read, on average, one book every month, and that book often has to do with either their current profession or self-improvement. Pretty amazing, and I would say fairly accurate, as I have read well over 500 books in my life, half on self-improvement. How many books have you read in the past year? What were they about? Education has its reward, and ignorance has its price. USA Today, America's largest newspaper, did a study and was able to prove this statement: education has its reward, and ignorance has its price. Look at their findings. Average salary by education level. No high school $16,053 per year. High school graduate $23,594 per year. Some college $27,566 per year. Bachelor's degree $43,782 per year. Advanced degree $63,473 per year. Think about it as you look at the above facts. The difference between dropping out of high school versus finishing what you started and receiving a diploma equates with an average of $7,541 more per year in income. If you are going to learn how to trade on the Forex and don't take the time to educate yourself first or be guided by a mentor trader who is already successful, you will probably lose all the money you start with. If you say, "I cannot afford to take the time to educate myself before I trade," remember, ignorance has its price. If you are one of the people who say, "I would rather take any money I would spend on education and put it into my live trading account, giving me more money to trade with," then don't trade. If you do, you will pay the price in trading losses. Remember, experience is what you get when you don't get what you want. In trading, you need experience and education. Our company talks to people every day from around the world, many of whom say, "I can't afford the price of education." Our only response is, you can't afford not to educate yourself. Education first. Before you begin trading on the Forex, you need to know 1. How to make money. 2. How to protect yourself financially. The only difference between successful traders and unsuccessful traders is that the unsuccessful ones don't know what they are doing and keep losing more money in a desperate attempt to get it all back. They are no different than all the gamblers who go to casinos. Successful traders know exactly what happens when they lose money and know how to put the losses into perspective. They don't desperately chase the market, trying to make up for past losses. They don't waste any time dwelling on the past, rather, they stay focused on what future trading opportunities exist, and that is what makes them successful. Our habits control our lives. In Chapter 1, I talked about how important it is to establish a solid moral and ethical constitution in our lives and the value of having a solid work ethic. Don't forget, who and what you are is what you will bring to the trading table. You will bring all your good habits and all your bad habits alike. All your good habits will enhance your trading, but all your bad habits will be magnified and most certainly intensify as you trade and could potentially destroy you. I pointed out that we are not what we think we are. We are not what we tell other people we are. We are not what we verbally promise to other people. We are what we do. What we do is who we are. Our actions are our automatic habits. Those habits force us in a position to either manage our daily poverty, daily mediocrity, or daily success. Learning to become a successful currency trader is a dream of thousands of people around the world. Let me assure you, it is a worthy goal. I have learned that every dream is in the mind of the believer and in the hands of the doer. We are not given dreams without being given the power to make them come true. If you are not making the money in your life you always dreamed of, perhaps it is because you were locked into a series of unproductive work habits or a self-destructive mindset. Perhaps you have created a mental block that has stopped you from earning more than you think you are worth. If you want to earn more than you are earning right now, you must upgrade your self-concept. Hopefully, this book can get you started in upgrading your self-concept. Always remember, if another person can do it, you can do it. Finding your pot of gold. Learning to trade on the Forex is your new rainbow. Your greater pot of gold at the end of this rainbow surprisingly will have nothing to do with money, it will be who you become as you slowly purge yourself of all your self-destructive habits that have stood in the way of earning more than you thought you were worth. Remember, in life, it is not about what you acquire that counts, it is what you become. As you trade on the Forex, you will have a choice to make, conquer or crumble. If you choose to conquer and persist until you succeed, you will become a totally different person. Your new productive habits will have an impact not only in your work life but also in your home, family, and personal life. No journey is complete, however, without surprises and complications. Frustrations and even bad things will happen along the way. You will, no doubt, incur some trading scars. Your mistakes, setbacks, and failures will not only create disappointment, they will also place you in a pressure cooker of performance. Do not fear the pressure, embrace it. Remember that if there is no pressure, there are no diamonds. Life keeps striking only those who are prepared to become that perfect diamond. Be grateful for every blunt strike that comes your way. There is nothing wrong with getting rid of the rough edges in your life, which is really getting rid of your bad habits. You will need to master the art of forgetting, forgiving, and moving on. Remember that the reason the windshield on your car is 50 times larger than the rearview mirror is because we are to stay focused on where we are going in our journey and not where we have been. You cannot waste time dwelling on the past. The market is constantly on the move, creating new opportunities for those traders prepared to take advantage of them. You must stay focused on those new opportunities, learn from your mistakes, and move on. Don't ever forget that the most valuable things in life cannot be bought with money. You cannot buy love, you cannot buy loyalty, you cannot buy respect, and you most certainly cannot buy time. I often wondered what experiences Mother Teresa went through as she dedicated her time serving the world that allowed her to write the final analysis. Her final analysis changed everything. The Final Analysis, by Mother Teresa. People are often unreasonable, illogical, and self-centered. Forgive them anyway. If you are kind, people may accuse you of selfish, ulterior motives. Be kind anyway. If you are successful, you will win some false friends and make some true enemies. Succeed anyway. If you are honest and frank, people may cheat you. Be honest and frank anyway. What you spend years building, someone may destroy overnight. Go ahead and build it anyway. If you find serenity and happiness, people may be jealous. Be happy anyway. The good you do today, people will often forget tomorrow. Do good anyway. Give the world the best you have, and even that may never be enough. Give it anyway. You see, in the final analysis, it's all between you and God. It was never between you and them anyway. The experiences in my life have led me to write my final analysis on trading. When it comes time to trade, it is between you and your bad habits. It was never meant to be between the bulls and the bears anyway. Health, happiness, and successful trading. Glossary. Ask rate. The rate at which a financial instrument if offered for sale, as in bid/ask spread. Base currency. In general terms, the base currency is the currency in which an investor or issuer maintains its book of accounts. In the FX markets, the US dollar is normally considered the base currency for quotes, meaning that quotes are expressed as a unit of $1 per the other currency quoted in the pair. The primary exceptions to this rule are the British pound, the euro, and the Australian dollar. Bear market. A market distinguished by declining prices. Bid/ask spread. The difference between the bid and offer price, and the most widely used measure of market liquidity. Broker. An individual or firm that acts as an intermediary, putting together buyers and sellers for a fee or commission. In contrast, a dealer commits capital and takes one side of a position, hoping to earn a spread, profit, by closing out the position in a subsequent trade with another party. Bretton Woods Agreement of 1944. An agreement that established fixed foreign exchange rates for major currencies, provided for central bank intervention in the currency markets, and pegged the price of gold at US $35 per ounce. The agreement lasted until 1971, when President Nixon overturned the Bretton Woods Agreement and established a floating exchange rate for the major currencies. Bull market. A market distinguished by rising prices. Candlestick chart. A chart that indicates the trading range for the day as well as the opening and closing price. If the open price is higher than the close price, the rectangle between the open and close price is shaded. If the close price is higher than the open price, that area of the chart is not shaded. Clearing. The process of settling a trade. Commission. A transaction fee charged by a broker. Currency. Any form of money issued by a government or central bank and used as legal tender and a basis for trade. Currency risk. The probability of an adverse change in exchange rates. Day trading. Refers to positions which are opened and closed on the same trading day. Dealer. An individual who acts as a principal or counterpart to a transaction. Principals take one side of a position, hoping to earn a spread, profit, by closing out the position in a subsequent trade with another party. In contrast, a broker is an individual or firm that acts as an intermediary, putting together buyers and sellers for a fee or commission. Economic indicator. A government-issued statistic that indicates current economic growth and stability. Common indicators include employment rates, gross domestic product, GDP, inflation, retail sales, etc. Euro. The currency of the European Monetary Union, EMU. A replacement for the European Currency Unit, ECU. Federal Reserve, Fed. The central bank for the United States. Foreign exchange, Forex, FX. The simultaneous buying of one currency and selling of another. Fundamental analysis. Analysis of economic and political information with the objective of determining future movements in a financial market. Good till cancelled order, GTC. An order to buy or sell at a specified price. This order remains open until filled or until the client cancels. Initial margin. The initial deposit of collateral required to enter into a position as a guarantee on future performance. Interbank rates. The foreign exchange rates at which large international banks quote other large international banks. Limit order. An order with restrictions on the maximum price to be paid or the minimum price to be received. As an example, if the current price of USD/yen is 102.00/05, then a limit order to buy USD would be at a price below 102, i.e., 101.50. Liquidity. The ability of a market to accept large transactions with minimal to no impact on price stability. Liquidation. The closing of an existing position through the execution of an offsetting transaction. Long position. A position that appreciates in value if market prices increase. Margin call. A request from a broker or dealer for additional funds or other collateral to guarantee performance on a position that has moved against the customer. Market risk. Exposure to changes in market prices. Mark-to-market. Process of re-evaluating all open positions with the current market prices. These new values then determine margin requirements. Offer the rate at which a dealer is willing to sell a currency. One cancels the other order, OCO, a designation for two orders whereby one part of the two orders is executed, the other is automatically cancelled. Open order. An order that will be executed when a market moves to its designated price. Normally associated with good till cancelled orders. Open position. A deal not yet reversed or settled with a physical payment. Over-the-counter, OTC. Used to describe any transaction that is not conducted over an exchange. Overnight. A trade that remains open until the next business day. Pips. Digits added to or subtracted from the fourth decimal place, i.e. 0.0001. Also called points. Position. The netted total holdings of a given currency. Quote. An indicative market price, normally used for information purposes only. Rate. The price of one currency in terms of another, typically used for dealing purposes. Resistance. A term used in technical analysis indicating a specific price level at which analysis concludes people will sell. Risk. Exposure to uncertain change, most often used with a negative connotation of adverse change. Risk management. The employment of financial analysis and trading techniques to reduce and/or control exposure to various types of risk. Rollover. Process whereby the settlement of a deal is rolled forward to another value date. The cost of this process is based on the interest rate differential of the two currencies. Settlement. The process by which a trade is entered into the books and records of the counterparts to a transaction. The settlement of currency trades may or may not involve the actual physical exchange of one currency for another. Short position. An investment position that benefits from a decline in market price. Spot price. The current market price. Settlement of spot transactions usually occurs within 2 business days. Spread. The difference between the bid and offer prices. Sterling. Slang for British pound. Stop-loss order. Order type whereby an open position is automatically liquidated at a specific price. Often used to minimize exposure to losses if the market moves against an investor's position. As an example, if an investor is long USD at 156.27, they might wish to put in a stop-loss order for 155.49, which would limit losses should the dollar depreciate, possibly below 155.49. Support levels. A technique used in technical analysis that indicates a specific price ceiling and floor at which a given exchange rate will automatically correct itself. Opposite of resistance. Technical analysis. An effort to forecast prices by analyzing market data, i.e. historical price trends and averages, volumes, open interest, etc. Transaction cost. The cost of buying or selling a financial instrument. Transaction date. The date on which a trade occurs. U.S. prime rate. The interest rate at which U.S. banks will lend to their prime corporate customers. Don't forget to smash subscribe and like and share. To see more content like this. See you next book. Much love.